My name is Mark Sherry. I'm a third generation farmer here in Walla Walla County. So my grandfather came here at about 1920, then my father, and now me. I have my kids involved, and so they'll be fourth generation. We grow wheat, mostly wheat, almost all wheat. We have grown a little bit of canola and a little bit of barley, and we have both of those crops this year on a small scale. 90% of our crop is wheat. So mostly a soft white wheat, although we're growing some hard red wheats this year also. We're a medium-sized farm, I'd say, for the county. There's some that are quite larger. There's some that are smaller. Where we go from a 90 bushel average to a 35 bushel average. So we're kind of extended in the county. We're north central part of the county to the very west end of the county, which is like 8 inches of rainfall, up to like 14 to 15. So like I said, my son works full-time. We have one other full-time employee who's been with us for 23 years. And my daughter works part-time. She works for USDA, FSA, but she helps with our books on the weekends and helps us, does all our farm program assignment for us. So Walla Walla County it's kind of the southern end of the Palouse region in eastern Washington, which is a very high productive area. Wheat's kind of king. That's the mainstay cash crop, and then other people grow other, like the barley or canola or peas, garbanzo beans are all kind of rotated through there on smaller scales. But wheat's king, and I should know, I'm going to say it's a 250 million bushel crop in the Pacific Northwest, which is Washington, Oregon, Idaho. Not big by Midwest scales, but pretty important to the Pacific Northwest with our two river systems, the Snake and the Columbia River, and the rail system, all taken to Portland. It's almost all taken to Portland for export. Very little of it stays domestic unless there's some market. Sometimes there's some market forces that keep it in the state, but for the most part it all goes for export. So we use our river systems, the dams and the barges, and our rail systems to get it to market. It's a big part of eastern Washington. And dryland wheat is a really big part of the 5 or 6 or 7 eastern border counties that aren't irrigated. And we're dryland. It's all dryland. Like my employee has been with me 23 years. He raised his family here in the house. And his boys are all grown up, and one of them is now working for a local grain co-op. The other one's just graduating from high school. So yeah, I mean, it educates people, keeps them full-time jobs. They're not all, there's some seasonal help, a lot of seasonal help, but there's also a lot of full-time year-round jobs on the farm. For some of the mid to larger farms, all need extra help to manage their resources, and that requires full-time help. So yeah, and then you got your suppliers, the buyers of the grain cooperatives, and then the suppliers that sells our fertilizer and fuel and all that. It trickles down into a fairly sophisticated economy. Yeah, so I'm a little bit unique in that we farm such a broad, from I'll say that 85 to 90 bushel average to 35 bushel average. So as you can imagine, the 35 bushel average is higher risk than the 90 bushel stuff, and because we rely on rainfall. So for us, it's a risk management tool. You couldn't farm the 35 bushel stuff because without that risk assurance, because it just, I mean, there's not, we don't collect on it all the time, but there's years when you might raise 50 bushels, and that's great, but there's years when you can raise 22. And so that's you need to be able to manage that risk, and that type of stuff isn't feasible without some type of risk management tool to go along with the farming practice. In this range here, this is 60 to 70 bushels. It's not as critical, but it's become a better program over my career. I've been at it for 35 years now. And it's a whole different program than when we first started using it. And so everybody in here takes it too. I mean, in this 60 to 70 bushel range, it's everybody uses it, everybody buys it. And then you get up in that higher rainfall, you might have but I take it up there because I take it everywhere, but we hardly ever collect up there. I think maybe we have, but I'd have to think about it. There's been some price fluctuations that we've had some indemnities on, but not on yield. So basically a risk management tool, and in my case where I farm that wide range of yield ground, it's an essential tool I have to have. We spend a lot of time working on it every year. You're just sitting there figuring out how to collect crop insurance. Eventually you're going to be sucking the bottom of the barrel, and it's not a sustainable practice. Good operators don't do that. We have other subsidy type programs too that we benefit from. There's all kinds of other benefit programs in society also. Our country's decided that agriculture is an important enough industry that they have to keep it stable. So they do that with crop insurance. They do it with right now we're involved in what's called these ARC County payments. Sometimes you get it, sometimes you don't. It's not a guarantee. They're all subsidized. I don't. It's just what society wants. If they want a stable guaranteed food supply, cheap, inexpensive, then that's what your subsidies buy. If you didn't have that, it'd be a different marketplace. We're incorporated. This is a family farm. I did it. My dad, he did it with his dad. I'm doing it with my children, and a lot of people are, when you say big corporate farms, and they're when you say you farm 10,000, 15,000 acres, that's a lot of acres, but it's not unusual, and we're incorporated. Does that make us a big corporate farm? I don't think so. We're still a family farm. We don't employ a lot of people. We're try to do it on a minimal amount of resources, and even I know people that are on what you would consider a big corporate farm, mostly in the irrigated type stuff, where you're talking a whole different type of playing game than we have, but they're still family operated. They're not General Electric that owns those farms. They're families that run those businesses, and are probably third, fourth, fifth, in this valley, third, fourth, fifth generation families. We had lots of programs. Crop insurance has changed hugely in the 35 years I've been doing it. Other farm programs have changed hugely. And you think it sounds crazy, but that we used to just set aside acres. We'd take like 20% of our acres and lay it idle. They were trying to supply manage, and now we don't do that anymore. And it's evolved, and we can grow as much as we want. And the programs now try to make the market more reactive to it. It's an evolution. I don't consider it bad. I think it's healthy. We have a very healthy ag industry in this country. That's not necessarily the case in every country in the world. If you're taking on a lot of risk and you don't have it in your loan portfolio, you're even riskier. And so the ones I work with, they understand it. They're not real attuned to it. They pretty much let the producer figure out what's good and bad for them. They don't say, well, you got to take this or you got to do that, because it's not their expertise, so to speak. But they're aware of it. They know that supplies a floor level, so to speak, that they can work under. I'm going to say they consider it an important part of what they look at. But at least my experience is they pretty much leave it up to the consumer, in this case, to figure out what works for them. Because there's different things you can buy, levels and all kinds of different stuff. They're aware of it, Sarah. I think that it makes them sleep better. But 14 was not a particularly good crop, but the prices were still relatively high. 15 was a below average crop, and the prices went out from under us. So at least here in our country, our yields were down and our prices were down for 15. And now we got some nice rains, and we're going to have a pretty nice crop this year, but our prices are still depressed. And yeah, they took notice. I can tell you, the banks and the PNW took notice. They had some cases where they had to carry over debt from previous years. The people that I work with, from my agent, an independent agent that sells the product, to the companies that I've worked with. I've been working with one company for a while. I forget, but a while. And you know, I think it's well run. I think, and when I first started doing this, it was not that it was bad. It was just different. It was a very low base system. They had very participation. That's when it was managed at the local county what was now the FSA office. And when it evolved out of that, at first I thought, well, what are they doing that for? But over time, it's evolved into a much more sophisticated program. I think it's well run. I understand it. I like it. I think it's a good product. I wouldn't farm a lot of acres that I farm without it. It just makes the risk level so much different that I wouldn't go take that risk without it, I don't think.